Hello, I'm Brooks Frederick, Principal Director, Investment Solutions Strategy at Envestnet PMC. 2022 was difficult for investors due to widespread losses in the stock and bond markets. Almost all major asset classes saw declines in 2022, but there was significant dispersion in the depths of the drawdowns. A balanced 60-40 portfolio had one of its worst years on record. Growth stocks, as measured by the Russell 1000 Growth Index, were hit particularly hard during the year, falling nearly 30%. Meanwhile, value stocks held up much better in 2022. Although still negative on the year, the Russell 1000 Value Index fell only 7.5%. We also saw that the value factor, which has underperformed for many years, outperformed during 2022. Common confusion by our advisors and their clients is understanding the difference of value as an asset class versus value as a factor. An asset class, such as large cap value stocks, represent actual securities with similar characteristics. Think of the well-known Morningstar style boxes in the Russell 1000 Value Index that best represent value as an asset class. Factors are distinct sources of return that have been identified through mathematical research, but it's impossible to invest directly into factors. After 4 straight years of growth factor outperformance, the value factor has returned to the forefront in 2021 and 2022. Since 1927, the value factor has beaten the growth factor by an average of 4.1% annually. In that sense, the long-term outperformance could be a signal of the return to value. On the Envestnet platform, we've seen advisors pick up on this trend by allocating more assets into value-oriented investment strategies. During 2022, there was 20% more flows to value-oriented strategies than growth investment products. Outside of the large cap core asset class, which typically serves as a core allocation across a majority of client portfolios, the large cap value asset class was number 2 in overall flows for the year. We witnessed advisors reallocating away from large cap growth investment strategies into defensive large cap value products, producing outflows in the large cap growth asset class and positive net flows into the value asset class for the year. Dividend-focused funds and separately managed accounts have been especially popular with financial advisors. Model portfolios with slight tilts towards value investing and factor-focused ETFs represent 2 more ways that advisors have been leaning into value. For high net worth clients, direct indexing has also become an increasingly popular way to implement a value tilt into client portfolios. Looking ahead to 2023, we see economic conditions that have historically favored value-oriented securities and investment strategies. Many Wall Street analysts believe that the extremely loose monetary policies have contributed to the rise of growth stocks over the past few years. As monetary policy continues towards the path of normalization throughout the year, growth stocks may lose a significant tailwind. If a recession occurs this year, as many economists are forecasting, value-oriented equities and investment strategies may prove a bit more resilient.